Welcome back, investors, to Ticker Time News. I'm Adam, and we have got a big show for you today. We've got a lot of stocks to talk about. We've got housing market to talk about. New data came in today, and it's going to be fun. And make sure to leave your ticker symbol in question in the comments, because that is the most important thing that we do on this live stream is answer your questions. So if you have a company you want us to dig into, look at the fundamentals, look at the stock chart and technical analysis, just leave the ticker symbol and your question in the comments, and we will go over it live during the show. So without any more lagging along, let's get into it. So the Dow Jones today, it closed at a record high. It closed at 35,756.88. It was up just 0.04%, folks. Just that slight little gain there. And the markets today were a little wobbly. They started out great, up pretty nicely, and then a lot of stocks in the market in general took this swing and this turn to end just barely up for the main indices. And it's something else. So we're going to talk about that. The S&P 500 and the NASDAQ both hit intraday highs, but did not close at those records. The S&P 500 closed at 4574, up 0.18%, and the NASDAQ closed at 15,235, and it was up 0.06%. Gold was down slightly today. It's at 1792, and that was down 0.84%. Crude oil is at nearly $85 a barrel. And Bitcoin right now is at 61,944. It is down about 1.4% on the day. Now, the growth that we saw at the beginning of the day mainly had to do with quarterly reports. They continued to show strong results. We had earnings from 3M, UPS, GE, or General Electric. They all topped forecast. And we had Eli Lilly. They actually raised their full year forecast. Nearly 30% of S&P 500 companies have reported earnings so far, and more than 80% of them, about 83%, have beat market expectations. Meanwhile, after the closing bell, Microsoft reported, and they beat revenue expectations, reporting 22% growth. This mega company is still putting out double-digit growth numbers. And Alphabet, they reported after the bell closed. They both had profit and earnings. They all topped the street's estimates as well. Now, about the U.S. housing market, the U.S. price growth moderate. It's slightly growing, very slowly. And this is a sign that the housing market is starting to contract a little bit and soften. The Case-Shiller came out with its report today. Excuse me. But before I get to that, I want to talk about the stock market, because it did take this turn today. Here's what I'm thinking. As the stock market, what you see on my screen, this is the daily chart for ticker symbol SPX, which is basically a copy of the S&P 500 index. And you can see this nice rally we've had since about the 13th of October. And it went up, 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 new all-time highs, and it is sitting right there, and it's just creeping up a little bit, down just a little bit. It's barely moving. So when you look at it like this, it's winning. The markets are winning again. And this goes into the year-end rally that we keep talking about. So with the markets winning again, they seem to be bolstered by familiar catalysts. That's mega cap stock strength, like Microsoft, like Alphabet. These corporate expressions of robust demand helping to offset cost of inflation, cost of transportation costs going up because oil is going up. And it's also mixed in this fear of missing out, the FOMO. People don't want to miss gains. It's a psychological condition that we have as human beings. We should take emotion out of our trading, out of our investing, but it's something psychologically, it's hardwired into us that we cannot remove sometimes. And it's hard for new investors to get into this mindset of it's about fundamentals, it's about technical analysis, it's not about emotion. So the gains, they're somewhat modest in percentage terms, yet they still register as something big given the lack of selling pressure after a big move this month by each of the major indices. Starting today, at the beginning of the day, the S&P 500 was up 6% so far in October, and the S&P Midcap 400 was up 6.4% in the month of October. The Nasdaq, well, it's up 5.8%, and the Dow Jones is up 5.6%. The Russell 2000, it's up 4.9%. All of these indices are up so far in August, and we can see that by this tail end rally right here. It is going up and up, slowly but surely. This should continue into year's end. That's what we talk about when we say the year-end rally. All right, moving on to the housing market. We had new data come out today from the S&P CoreLogic Case-Shiller. It's a 20-city home price index in the U.S., and it increased 19.7% year over year for the month of August, slightly below a record 20% rate in the previous month, which would have been July, and compared to forecasts of 20%. Phoenix was up 33.3%. San Diego was up 26.2%, and Tampa was up 25.9%. They reported the highest annual gains among the 20-city homes in August. Meanwhile, the National Composite Index, it increased 19.8%, the same as in the previous month, and remaining at a record high. As has been the case for the last several months, prices were strongest in the Southwest, up 24.1%, but every region logged double-digit gains. So that's what I have for the housing market. It is still strong, but it is starting to soften a little bit. It's not pumping out new record high after record high after record high. Excuse me for one quick moment. Sorry about that. Thank you. Okay, let's look at a couple of stocks. This is the a fun part here. Let's look at Robinhood, who used to be everyone's favorite hero. Now they seem to be everyone's favorite villain. Now, Robinhood hasn't been on the scene very long as a public company, but you can see here that we're starting to get some patterns technically. Now, let me switch this to a 1 hour chart. We can get a better look at this. So, Robinhood was starting to set up this falling wedge pattern, okay? That's where the price is starting to meet lower highs and higher lows. And the price tightens. So your run up from a bottom to a top is getting shorter the further you move in time. Well, this trend slightly broke today, okay? Robinhood was up 1.4% on the day, but then something happened. After hours, the stock is down 8.42%. Why did Robinhood drop so far in after hours? Well, Robinhood reported their earnings. And after this after hour pull down of about 8%, it's because the big revenue and guidance miss for Robinhood. They missed hard. Robinhood Markets EPS of $2.06, revenue of $365 million. Now, that revenue was an increase of 35.2% year over year, but it missed estimates by $72.55 million. Monthly active users, or MAUs, increased 79% to 18.9 million, compared with 10.7 million in quarter three of 2020. Assets under custody, or AUC, increased 115% to $95 billion, compared with $44 billion in the same quarter a year ago. Average revenues per user, or ARPU, decreased 63% to $65. And that's compared with $102 a year ago in the same quarter. Crypto activity declined from record highs in the prior quarter, leading to considerably fewer new funded accounts, a slight decline in net cumulative funding counts, and lower revenue in Q3 compared with the prior quarter. Now, the CEO said something that I would like to share with you all, and here's what Vlad had to say. He said, quote, "This quarter was about developing more products and services for our customers, including crypto wallets. More than 1 million people have joined our crypto wallets waitlist to date. With 24/7 live phone support, we believe that Robinhood is becoming the most trusted and intuitive platform for retail and crypto investors. And looking ahead, we're committed to delivering tax advantage retirement accounts to help everyone invest for the long term." That's what Vlad had to say, the CEO of Robinhood. So they look at this quarter as, yeah, we missed, but we're building out new products. So that will help us in the future. I'm not sure that that's something investors wanted to see from an earnings report today. Obviously, it's not, since they were down 8.4% in after hours. But it's something to think about. So Robinhood is building out new products, but we'll have to wait and see how those products turn out. The crypto wallet, that is a good move. Right now, if you want to move your crypto from Robinhood, you have to sell that crypto, and then you get hit with a tax bill from the profits that you sell that crypto for in order to transfer that crypto someplace else. So there's no easy way to take your crypto holdings right now and move them to cold storage. You just can't do it on Robinhood right now. So that's what they're talking about when they say they're building out a crypto wallet. So you can move your crypto around. Now, the retirement accounts, a lot of other brokerages have that offer. Webull, for example, you can set up a retirement account to do your trading and investing in, and then you get tax advantages for doing that. Now, the outlook for Robinhood for Q4 21, the company expects quarterly revenues no greater than $325 million versus $489.2 million, as estimates should say, and full year revenue of less than $1.8 billion. Additionally, it expects new funded accounts for the fourth quarter to be roughly in line with the 660,000 opened in Q3 21. So when I said in my Catalyst video from Sunday, What I wanted to see from Robinhood is the trading volume still as high as it was earlier in the year, or has trading volume slowed down? And it looks like it has slowed down. So that's why they are short on revenue, and their growth prospects for the next quarter do not look as bright as they were at the end of last year and the beginning of this year. Now, one thing that could change that is if they do introduce a crypto wallet uh, relatively soon, enough to affect Q4 results, then maybe more people will trade crypto on Robinhood, and that would, of course, raise up their revenues. Because as Bitcoin continues to run through the end of the year and in the first half of 2022, then you'll have more trading on the platform that increases their revenue. Also, if they can do a bit of brand damage control, there's a lot of investors that don't like Robinhood because of what they did at the beginning of the year. Maybe as time moves on, that condition will wear off and their user base will grow at a faster rate again. We don't know. This is all speculative talk right here, but it's just some thoughts that I have on the company. Okay, moving off Robinhood, I want to go to Raytheon Technologies. Their ticker symbol is RTX, and I did not type that in right. RTX. Okay, Raytheon is an aerospace defense company contractor. They were down 2.3% on the day. They're up about 0.5% in after hours, but you can see this big fall right here. There's a big candle wick. It came all the way down to about $87 or so today. So a big drop for them, but also a big bounce to hold above the 200-day moving average, which is the yellow line on the screen here. But Raytheon Technologies is dealing with a bit of turbulence today after the aerospace and defense giant posted Q3 earnings results this morning. The company has now posted 3 consecutive double-digit EPS beats. However, the company's revenues were light, and it guided full-year revenues to the low end of prior guidance. So they don't have the revenue there for them. They did beat on EPS, but because the revenue is light and the revenue is forecasted to be light, and I'm going to explain why revenues are light in just a moment, but that's what caused this big drop this morning and then this rebound in the afternoon for them. So Raytheon focuses exclusively on aerospace through its Collins Aerospace and Pratt & Whitney. It's an aerospace engines company segment. And then, of course, the defense segment. Raytheon reported an impressive 17 cents EPS beat, a nice improvement from the 10% beat it had reported in Q2 21. Revenue was light though, but for Raytheon to report close to inline revenues with slight beats or misses is fairly typical and thus not very concerning. Excuse me. And that's why we had a very nice bounce in Raytheon this afternoon for them, back above their 200-day moving average here. Now, Raytheon also raised its fiscal year 21 EPS guidance by an amount that exceeds Q3's upside, which implies raised guidance for Q4. Overall, this was a solid quarter for Raytheon, but there were some trouble spots. The big picture takeaway is that the commercial aerospace market, well, it continues to recover nicely. Most people think of Raytheon in terms of sales for new planes or OEMs, but it has a pretty big aftermarket business, parts, repairs, provisioning, modifications. Raytheon is not benefiting as much from new planes being built, but of its growth in aftermarket sales. So the maintenance of airplanes, that's where Raytheon is making its money right now, which tells us something about the airlines. So the airlines are flying their planes for more hours, and it tells us that airlines are more focused on firing up planes that were put into hibernation during the pandemic and getting them back in the air. That makes me a little bit nervous heading into Boeing's, and Boeing's ticker symbol is BA, and they report their Q3 results tomorrow. And let's just take a look, ticker symbol BA, and look at how Boeing is faring. So Boeing was down 1.4% today, up just a fraction of a percent in after hours, but they've been in this little downtrend here since the 11th of October. But if you look, this decline today, this 1.4% decline, today was mainly due to the news of Raytheon's report, their earnings report. And since they have similar products and services that they offer with regards to the aerospace industry, this sunk Boeing today. Now, when they report their earnings tomorrow, they have an estimated EPS at a loss of 20 cents and estimated revenue of $16.6 billion. So we'll have to see. Is Boeing having the same type of problems that Raytheon is having in the aerospace industry? Fewer new planes, but more maintenance for current planes in operations. That's what we'll be looking for. Okay, let's hop over. Let's hop over to General Electric. Ticker symbol is GE. Okay. GE was up 2% today, and they're flat in after hours. Nice bump today because of their earnings. They beat by 32% on EPS, but they did miss on revenue by 4.4%. So their Q3 results were a bit mixed. Now, their fiscal year 21 EPS and free cash flow, they're guiding that higher moving forward. Adding to a growing list of companies, GE fell short of top-line expectations due to the disarray in the business environment, but outperformed earnings forecast as productivity and margins improved. The company's 13-cent EPS beat also speaks to the major strides that GE has made in its transformation to streamline and simplify its operations. Overall, GE is performing very well considering the disruptive circumstances. Not only is the company contending with supply chain and inflationary headwinds, but uncertainty regarding whether production tax credits for offshore wind investments will be extended is weighing on the renewable energy business for GE. In terms of the factors that GE can control, including its streamlining efforts, the company receives high marks. So there's a lot of things that GE does that it cannot control, and it's out of their hands. But what they can control, they're doing a good job of. So that's what I see with General Electric. All right, let's talk about 3M because they have their tentacles in many different industries, and it can give us a good read on those industries. So 3M, their ticker symbol are 3Ms, MMM. Okay, so they were flat today, flat in after hours, and you can see right now they are trading on their 50-day moving average. They took a little dip right here at earnings, but brought it right back up, and the rest of the day, beautiful. They beat by 11% on their EPS and by 3.3% on revenue. So they posted another sizable beat for Q3, and the market just kind of ignored it. Again, they're flat on the day. So investors in 3M, they didn't think much about the earnings report, kind of like, eh. So this does mark the fifth consecutive double-digit earnings beat for the global conglomerate, which operates in multiple industries such as automotive, healthcare, electronics, and home improvement. Given this massive footprint, 3M is exposed to many global supply chain issues. As a result, the company has been impacted by multiple industries facing chip, raw materials, and labor shortages, as well as its own supply chain headwinds. For example, operating materials fell in 3 out of 3M's 4 segments year over year in Q3, as this was paired with wider than normal fiscal 21 guidance when just one quarter remains, indicating ongoing supply chain uncertainties. Investors are not overly thrilled by 3M's Q3 results. Overall, despite another solid earnings beat, investors remain focused on inflationary pressures, which 3M doesn't expect to slow down heading into Q4. Whoa, wait a minute. That's another company that's talking about inflation will not slow down. So we're looking at 2022 for whether or not inflation is going to peak or not, whether inflation is going to reflect and turn down. It's definitely looking at and listening to these earning calls and reading the transcripts. These companies are not expecting inflation to ease at all in 2021. They're not expecting inflation to get any better for the rest of the year. So 2022, is it Q1? Is it Q2? Is it the second half of 2022 when inflation starts to make the arc and turn down? We're not sure. It's uncertainty, and it's affecting a lot of companies going forward. And with these bigger companies talking about inflation not easing, well, you can start to see a picture being painted for why the market was up this morning and then sold off for the rest of the day to being flat. Uncertainty. That's why the market was flat. Okay, going back to 3M, the good news is that the company continues to implement price hikes and expects those actions to gain traction in Q4. However, looking ahead, 3M shares may remain stuck in the mud as inflation continues to linger for the foreseeable future. We don't know when it's going to end. That's the big read from 3M. Inflation. It's here to stay, and we don't know how much longer it's going to continue on. That's what we get from 3M. Okay, let's hop over to another company, UPS, and their ticker symbol is UPS, United Parcel Services. All right, so logistics company. Look at this. In my video from Sunday, Catalyst Watch, I predicted that UPS would if their earnings were good, they would test the $214 to $215 level. I said the stock would go up by 5%. And I said if their earnings were really, really good, that they could test all-time highs. Guess what they did today? UPS set a new all-time high today. Here's their earnings, up 6% on earnings per share, up 2% on revenue. So let's talk about this a little bit further. Now, I don't get them all right. I make mistakes, just like everyone does. But I was right on UPS. And it makes you feel good when you are right about something. But again, I don't get them all right. Not at all. I make mistakes, just like everyone else does. But when I make a mistake, I admit it and I say that I made a mistake. Now, I was talking about UPS going up 5%. They were up 6.9%. Call it 7% because they're up 0.5% in after hours. So that $214 to $215 level, they broke through that, set a new all-time high at $220.24. And they are currently right now in after hours at $219.50, holding perfectly right now, perfectly flat. I do expect some profits to be taken, and that's why we've got the Christmas candles, red, green, red, green, red. That's what the Christmas candles are called when they alternate like that. Okay, so UPS, they really delivered with its Q3 earnings report, and they reported this morning. That's why the big gap up is this morning right here. And we're looking at a 1-hour chart right now. Okay, so back to UPS. After they reported this morning, it was not so much the size of the upside that impressed. In fact, this was UPS's smallest EPS beat in the past 6 quarters. However, given the big miss that FedEx posted last month, even a more modest beat is being taken as a humongous win. It looks like UPS has been able to manage the labor shortage better than FedEx did. And let me just peek in on FedEx real quick to show you their chart. Their ticker symbol is FDX. FDX. When I started this channel several months ago, FedEx was one of the first companies that I talked about. And it was during one of their earnings report last year. And they had missed on their earnings report. And it was mainly due to management. Now, if we look here at their earnings, they missed by 10% on EPS, or earnings per share. It was estimated to be $4.88. They came in at $4.37. They were flat on revenue. Estimated $22 billion. They came in at $22 billion. Now, this produced a big gap down for FedEx. So if we look right here, the past month to date, and them missing earnings right here, this was their second earnings in a row that they missed on. Now, the past month, they're up 4.9%. And since they bottomed out, right here on October the 5th of a low of $224, they have since risen to where they are right now at $237. That's where they sit right now. But back to UPS. So with investors concerned with UPS because of FedEx's earnings report, it took the stock down. But again, since that same bottom of October the 3rd for FedEx, that's about the same time that UPS hit its bottom right here. They're on October 4th, a low of $177. Now they're up to $219. So that was, what was that gain? Let's see what that would have been. If you would have bought down here and ridden to where it is right now, you would have had a nice 23% gain in UPS. So keep an eye out for these things. If you see a company and it misses earnings, right? Go in and read and understand why they missed. What were the reasons for it? Then you can find another company in the same sector, a competitor, let's call it, and look at their past earnings and what they're forecasting. Does their forecast match up with what the other company actually reported? If it doesn't, and you can understand the difference for why, like FedEx and UPS, you could probably make yourself a nice gain from the competing company that is forecasted to do better. So this is a good example of that. FedEx and UPS. FedEx had terrible earnings, but because UPS had good earnings, they weren't blowout earnings, but they were better than FedEx. They were rewarded. Investors were rewarded. Now, demand remains strong for UPS. UPS also noted that the economy remained strong in Q3 despite the dampening effects of COVID-19 and inflation, along with shortages in inventory and labor. Demand for USPS's services remained high, and the pricing environment in the industry was firm. UPS expects similar dynamics in Q4, which I found interesting because of inflation. So many companies are reporting Q4 as an issue. I see here you have a question. What is that question? Go ahead and ask, and we'll dive into it. I have no problem pausing here. I'm going to finish my thoughts here on UPS, and hopefully you'll have your question, and we'll go over it. So why is the stock higher despite the more modest beat? Well, I think investors are breathing a sigh of relief of FedEx's big miss last month. Relative to that miss, the smaller UPS beat this quarter looks like a win-win. We listened to both calls, and UPS was definitely more positive regarding labor issues. I also think that UPS's comments about film pricing and its bullish outlook on the Q4 holiday season are helping propel the stock higher. Overall, UPS seems to be handling cost pressures better than FedEx, and the stock's price is getting rewarded. All right. I have something else I want to talk about Meet Kevin's video that he posted yesterday with Mr. Wonderful. But let's get into the questions we have here. So if I put $400 in Cardano right now, while it's at $217, how much would I have if it hits $5? Okay, so we do the math on that. Let me pull this up real quick. Oh, come on, calculator, work for me. $2.17 to $5 here. $130%. So at $2.17 going up to $5, that would be 130%, 130.41% gain. So right now, we can call it's a $2.16.4 point 3. So if you went to $5, that's 130%. I mean, you went to $5 on this. So it would be $400 times 130%. So I just go right to Google and I do $400 times 130%. And that would be $520. Is that right, Google? Yeah, $520. Yeah, 520. Let me go to, I've got Cardano up on the chart right now. So it's almost to it's down to 215 right now. Ooh, this looks messy. Let's see, let's pull this down. All right, let's see. So this is what it would look like on the chart going up to where it is right now at $2.15 up to $5 right here. 130% gain is what you would see. So what would you suggest you put $400 in? Quite frankly, there's a lot of things that you could put $400 in. If you're looking in the crypto market, I would either go with Bitcoin, Ethereum. Cardano has been on a nice run. I think Bitcoin is going to have the most success for the rest of the year. Now, not financial advice. This is for entertainment purposes only. But I think Bitcoin will definitely be a nice performer for the rest of the year and into the beginning of next year. Because just think, Bitcoin, BTC USD on the chart. If you look at Bitcoin right now at $60,700, I'm a firm believer that Bitcoin is going over 75,000 by the end of the year. And if we just plug this into the chart for where Bitcoin is right now, We're looking at 25% to 75,000. But if this thing could run up to 100,000, like some people think it is, I'm not sure if it'll go to 100,000 by the end of the year, but maybe by January, February it could. But Bitcoin to from where it is now to 100,000, which would be crazy, is 66% from where it is right now. All right, so if I put my 400 in Bitcoin, would I make you would make that percentage gain. So there's no there's no really any way to plan out a get rich quick with the money. It's good to be diversified. So the safest bet would be to pick 3 coins. Me personally, that's Bitcoin, Ethereum, and Cardano, and put a third of your available funds into each one of those as a way to protect yourself. You can also invest in instead of Bitcoin or crypto directly, you can invest in crypto indirectly. For example, if you invested in a stock, Hut 8 Mining, it goes up and down with crypto. But if you put your money in and you leave it sit there in crypto until the end of December, January, you'll make a good amount of money. I mean, it's not going to be like doubling your money or tripling that or tripling your money. We can do a quick experiment here. If you look at what DWAC, the SPAC, just did, let me plug that in here real quick for you, just as an experiment here. DWAC, which was a new SPAC, it ran up really high this week. So when it launched the news on this, it was down here at $10. And then it ran all the way up to $175. Now that run up was 1,665%. That is a humongous gain. And if you take that, say $400, but you multiply that by 1,600%, that takes your $400 to $46,000. But finding these, they're like the needle in the haystack. They are they're rare and they're hard to find. But when you find them, there's something that will run really fast and then they'll fall just as hard. So you have to be very careful. You have to use trailing stop losses so you don't end up losing your money. But this is finding these little gems are the best way or the quickest way to make any type of money. Otherwise, it's put it into stocks of your choice or crypto of your choice, and then let it sit there and let it appreciate over time. So that would be my suggestion. Your call on what you want to do with it. Again, these are just entertainment purposes only. Okay, if you have any other questions, let me know. I'll be happy to answer them. There was another company that I wanted to talk about. Let's see if I can remember what let's see. No. Let's see here. Well, I can't find. I know it was. Oh, what was that company? Okay, what is their ticker symbol? Oh, why can't I find it? Okay, I want to talk about Circle for a moment, but I can't. I seem to have lost. Circle. It's the first of its kind crypto national bank. Here, let me pull this over here. This is what I wanted to talk about. Okay, so Circle, first of its kind crypto national bank. So what they talk about in here is we're assured by several federal entities that the U.S. has no intention of banning digital assets. This sets the landscape for crypto to thrive in a regulated environment. Now, once crypto becomes regulated, that's going to open the door for a broader market of individuals, institutions, big companies, uh, wealthy individuals. It's going to open the door wide for a lot more exposure and for a larger market for cryptocurrencies. So I believe regulation is a good thing for the crypto market because it's going to allow more people to invest in the crypto market. Bitcoin, Ethereum, Cardano, Shiba Inu, all of them. It's going to open the door for them. So it's no surprise that Circle's business model resembles a bank in the crypto space, given its CND's top management expertise and its vision of becoming a crypto national bank. Circle is expected to go public via a merger with CND. That's the ticker symbol I was looking for, CND. There we go. CND, it was up 4.3% today. This is a sleeping giant right here. It's only at $11. If we take this last candle down here at the bottom up to the peak right here, it's already up 16% total for this rally. This rally's not over yet. There's still room to go because a lot of people do not know about this yet. Now, it also continues in here about the merger with CND at a $4.5 billion valuation, or 5.8 times 2023 revenue, under the assumption that USDC adoption will grow sixfold in 2 years. No doubt in my mind that it will. But if we look, a valuation right here of $4.5 billion right now, their market cap is only $371.5 million. So this market cap right here, if the company is expected to be valued at $4.5 billion, then this stock still has a long ways to go from $11 to get to a market cap of that size. So that's why I say that this SPAC right here has definitely got some room because of Circle's valuation and where the stock is currently at. So I want to bring this to y'all's attention. I haven't invested in it yet, but it is something I'm considering heavily. Now, the prospect of investing in a potential first of its kind crypto national bank with global exposure, borderless, presents a very attractive investment value proposition. Absolutely, it does. Investors should take note of the recent price behaviors of similar crypto SPACs plays where the majority, if not all, eventually fell below their $10 floor after the merger. We're not at merger yet, okay? So this is a article that goes into great detail about Circle and its business model. But if you're looking for a SPAC that has some potential, then right here, ticker symbol CND, Concord Acquisition Corp. That's got some potential to run because the market cap right now does not meet the market cap that it is currently sitting at $371.5 million. So I just wanted to bring this to everyone's attention just to talk about it. If you invest in it, cool. If not, fine. It's all good. Like I said, I have not yet. It's sitting at $11, $10.99 after market. But it's what I'm thinking about because a national bank for cryptocurrencies, that is something the market desperately needs. So if it can pull it off, that is wonderful. All right, let me talk about a couple of the winners here. We've got Shiba Inu. It's up another 10% today. Oh, 11%, 10%, bouncing around. Let's see who else do we have here. UPS was up nice. Nvidia has been up good for the past couple of days. It was up 6.7. Dutch Bros has finally bounced. It was up 5%. They took a big they've been on a big run there. 23andMe still up another 5%. They are doing a merger to help bolster their private health. Let's see. Well, the VIX took a bit of a spike today, up 4%. Let's see here. We got DraftKings and Golden Nugget both up 4%. Who else do we have up here? There's Bloom Energy again, up 2.6%. They were up big yesterday. Kimberly-Clark, we talked about yesterday. They were up another 2.4% today. Workhorse finally getting some green, up 2.3%. GameStop was up 2.22%. Okay. So we got a lot of earnings that performed well. The investors are getting rewarded. There's GE up 2%. Let's just take a look at the losers real quick. See what the big ones were. Digital World, which is the SPAC that DWAC, is down 29%, and it's down another 6% in after hours, sitting at $55.40. That's the stock that ran up over 1,000%. It is down now. I expected that. I knew that would happen. We got Lockheed. They're down 11.8%. GitLabs is down 10.6%. Upstart is down 9% today. I have a video coming out. It might be out right now for Upstart. Their earnings are November 9th. We're keeping an eye on them. They've got a really good business model. The company has run up a lot, over 1,000%. So seeing a pullback in them is not surprising whatsoever. All right, that's what I see here for some of the, you got Sunworks, which is a solar company. They were down 5.7. Pinterest, it's been taking a beating since the news of them and PayPal not going through. It would have been an interesting combination. Affirm is down 5.1%, 0.5% in after hours. So yeah, there's some of your losers for the day. All right. Well, if you do have any questions, leave the ticker symbol and your question in the comments. I will be glad to answer that question live on the stream. If you are watching the replay, you can leave your ticker symbol and question in the comments, and it'll be our conversation on our next live stream. So I think I'm going to wrap it up here. I've got your questions all answered. If you do have any other questions, please feel free to leave them in the comments, and we'll answer them during our next live stream. So thank you all so very much for watching, and I will see you in the next video.